Assalamualaikum warahmatullahi wabarakatuh. My name is Anis Habibah from KAM 2381A. For today, I will review two articles, which is electricity and demand. For electricity, the topic is no and insight for gasoline use. The Biden administration attempts to reduce fossil fuel usage are not in line with public preference, as revealed by economists' analysis showing that despite policies to end reliable and inexpensive energy source, Americans continue to heavily in gasoline consumption. This reflected in the price elasticity of demand for gasoline, which is negative 0.42, indicating the gasoline is considered a necessity rather than a commodity that consumers are willing to move away from in the near future. This inelastic demand for gasoline challenged the narrative that fossil fuels are on their way out as consumers continue to prioritize its usage despite policy initiatives aimed at reducing its consumption. The question for 2024 remains whether America will allow the Biden administration to further limit the supply of gasoline and potentially increase price even more despite the economic impact on consumers. For the second article review, which is the topic of demand. The topic of article is OPEC retains demand forecast for 2024, raises economic growth projection. Brent stuck at $82 per billion. OPEC projection for oil demand economic growth. OPEC predicts that global oil demand will increase by 2.25 million BPD in 2024 and 1.5 million in BPD in 2025. This forecast remains unchanged from the previous month, and OPEC attributes the growth to strong global economic performance. The organization has raised its economic growth forecast for 2024 by 0.1 percentage point with expectation of 2.8% growth. OPEC's projections are more optimistic than IEA. The group has also decided to continue voluntary oil output cuts into the second quarter mid-2024, with Saudi Arabia maintaining a supply cut of 1 million BPD until June. Okay, for oil price outlook, crude oil futures on the domestic front were trading 0.7% higher than 6,488 per barrel on the MCX. OPEC predicted strong demand for 2024 and 2025, while IEA expressed concern about global oil demand. Analysts suggest that the weakening dollar index and anticipation of interest rate cuts are supporting crude oil price. Crude oil is expected to remain volatile with support level at 76.9 and resistance at 78.